Happy Friday, everybody. I'm really excited for this week's video. Number one, it's a completely different format than we usually do. You know, it's usually me just standing somewhere talking about something, but I actually have a guest today, and it's a really important guest for a lot of you U.S. citizens who are thinking about moving to Panama or are already living here. And that is, what do we do about taxes? Because you can leave the United States, but you're not getting away from those taxes, guys. You do still have to file. The United States is one of 2 countries in the entire world that requires you to still file your taxes. So it's important. So today I have my hero, my tax guy, who has completely changed my entire perspective on taxes. His name is Allen Pfeister, and he is going to be talking all about the things that you need to do. We're going to be answering some questions that some IGO Panama Facebook group members asked. And after the video, in a couple more weeks, we're going to do a follow-up because I'm sure you're going to have questions as we go through this. So take notes, listen up, and let's learn about what us poor U.S. citizens have to do when it comes to the IRS when we're living in Panama. Yeah. All right, Alan, take it away.
Hi, everyone. I'm Allen Pfeister, based here near New Orleans, Louisiana. I'm a CPA, and since 2013, I've been helping expats almost exclusively. So I've been an expat myself. I know how wonderful it can be. I lived in Saudi Arabia for a little while. I lived in South Korea for 10 years, Denmark for 2 years, and I love the expat life. But unfortunately, one of the downsides of being a U.S. expat is having to deal with all of the tax issues. So we're going to go through and cover a lot of that, discuss a lot of things that you need to make sure that you're aware of, because there's a whole level of complexities that surround expat taxes, especially if you own a business out overseas, or if you have some rental property, or like what a lot of people do in Panama and Costa Rica, if they purchase a home through a corporation. So my goal here is really to help answer a lot of these common questions. I'm going to go through and talk about some of the main issues, and then we're going to follow up with Mary with some questions that were sent to her in advance. So with that, let's just jump right in. And there's a couple of topics that I'd like to talk about. So first, I'd like to talk about if you actually need to file the U.S. tax return or not. The second, I'd like to talk about the tax benefits of living and working overseas, primarily the foreign earned income exclusion and the foreign tax credit. I'll explain all of that in a minute. Okay, third, what if you have bank accounts or other financial accounts overseas? Do you need to report them? The easy answer is probably yes, and that's to avoid a lot of penalties that can easily start at $12,500 per year, which are absolutely ridiculous. They are geared towards catching money launderers and criminals, but they apply to everybody, even the common taxpayer. After that, we'll talk a little bit about specifically about owning a home in Panama that you bought through a Panamanian corporation. You hold in a corporation. That is a huge, potentially complex tax issue that if you don't get right, it could easily cost you $10,000 a year. Again, these penalties are sky high for international tax issues. They're really geared at people trying to hide money and avoid taxes and everything. But unfortunately, they just apply for everyone. And the way I like to explain it, it's like the government is going fishing for criminals, but instead of using, a fishing pole, they use dynamite to get everybody, unfortunately. And then finally, I'd like to talk just a little bit about residency, state residency specifically. Do you have to keep filing a state income tax return or not? I get a lot of questions about those. So let's just jump right in and let's talk about if you actually have to file a tax return once you leave the United States. So as Mary kind of alluded to, most countries, when you're not living in that country, you don't have to pay taxes to that country, and you don't have to file tax returns in that country. But the United States, like very few other countries, is different. The United States takes the approach that they tax their citizens on all their worldwide income, no matter where they live. So if you have income that's over a certain amount, then you're required to file a U.S. tax return. Now, even though you have to go through the arduous process, a lot of expats wind up paying little or no taxes. But if you don't file, they could do what's called a statutory return, meaning they prepare a return based on some information that they have for you, and you lose a lot of tax benefits that way. You could potentially not get your passport renewed, and there's a lot of ongoing talk about that going back and forth in Congress. You could be assessed a lot of penalties and etc. So it could wind up to be a real nightmare not filing tax returns when you have to. And to be honest, a lot of people simply don't know that they have to file tax returns. So it's quite understandable. So when do you have to file? It all depends on your income, okay? And the amounts go up a little bit, and it depends a little bit on your filing status as well. So if you're single and you earn more than about $13,000, you're required to file a tax return. If you're married filing jointly, then if you earn roughly double that, about $26,000, then you're required to file. So it's really based on the amount of income that you have. And these numbers I say about because it's based on the standard deduction, and those amounts increase a little bit every year. But there are a couple of small nuances that are just ridiculous. I don't know how else to say it. But if you are married filing separately, and a lot of times this applies to someone, an American who is married to a non-American, because they don't want to pull their spouse into the U.S. tax system and have all of their income taxes. If you're married filing separately, if you earn $5 or more, you're supposed to file an income tax return. Yeah, I know. $5. I couldn't believe it myself. I actually had to look at it through the statutes the first time I saw that.
Oh my God.
So
$5.
$5. Yeah, can you believe it? And there's
US
also
government,
another
I can
one
believe
that's particularly low, and that's if you're self-employed. Basically, you run your own business. If you earn more than $400 a year, then you're supposed to file a tax return.
Wow.
So that's kind of the basic outline of when you have to file a tax return. It really.
And I think it's kind of
depends on
important. If I hate to interrupt you, but I think it's kind of important to let people know that if you are earning any type of income through like PayPal or eBay or anything like that, haven't they changed the requirements now to where they have to report to the government any of your earnings that are $600 or more?
Yeah, there's been a number of changes. There's on these Form 1099s. Some of them have different endings and all of that. But yeah, there's new reporting requirements. So if you just have credit card transactions processed through Amazon, which a lot of people, then that all gets reported. And they're working, more and more on trying to, connect all of this information to see how much each person actually owns. So in theory, you would think it would be easy. But the IRS, they get all this information, they can put it together. But in reality, they're drastically underfunded every year, and they have horrible IT systems, which causes a whole host of problems. I mean, just try picking up the phone and calling the IRS.
Yeah, we've been trying that for months.
Yeah, no, I've just even though that the pandemic's been over, people call, they're on the phone for about an hour, and then what happens is that, and it happens to me too. Somebody picks up and hangs up automatically.
Yep.
Just gone. There's nothing you can do.
Our tax dollars hard at work.
I know. It's ridiculous. It's ridiculous.
Okay.
Well, anyways, let's move on to the next topic. So you are an expat, and what are the benefits of living and working overseas? All right. What causes most expats to pay no or little tax to the U.S. federal government, even though they have to file? Well, there are two key benefits. One is the foreign earned income exclusion, and the other is the foreign tax credit. So you have a choice of which one to use. So I'll start with the foreign tax credit, just to let you know how that works. So the idea here is you're not going to be double taxed. So say, for example, you're working in Panama. The highest tax rates, I believe, are they about 25%? The top tax
I honestly don't know, because I haven't started any business transactions in Panama yet, so I haven't had to pay taxes here.
Yeah, if you don't have to, then that's legally, that's fantastic. Don't do it.
Yeah.
I think the top rates are about 25%. And in the United States, they're roughly 40%. Right. So if you do operate a business or working directly in Panama, paying taxes in Panama, do you have to pay that 25% to Panama and also 40% to the US, or 65% altogether? Right. And the answer is no. You're not going to be double taxed because of the foreign tax credit. Now, the way it works is that you still pay the highest rate. In this case, it would be the US at 40%, 25% to Panama. It's just all a question of how it gets divided. Okay, so first you start off with where the income is earned, or where it's sourced for tax purposes. So you're in Panama, right? It's Panamanian income. So Panama has what's called the first right to tax. Okay, so you pay that 25% to Panama. Then you do your US tax return, right? You figure out your US tax, you owe 40%, but you can decrease that by that 25% you paid to Panama, so you wind up paying 15% to the US.
Okay.
So altogether, you're still paying whatever that top rate is, 40%, but you're not paying more than that.
On top of it. And let me stop real quick and just let people know that where Allen said a few minutes ago that the United States taxes worldwide income, so it doesn't matter if I earn money in the US, in Panama, and in Zimbabwe or Antarctica, they're taking a piece of it. But in Panama, Panama does not tax worldwide income. So for example, I own an online business. That business does not have customers in Panama. My customers are primarily in the United States, Canada, the UK, and Australia. And so I am not having to pay Panama taxes on that income, because it's not income that's generated within Panama. So for my situation, I'm only beholden to the United States government for my taxes. But if you run a restaurant or a hotel or something like that here in Panama, you're going to have Panama taxes, but then you can take advantage of this foreign tax credit that Allen just talked about.
Yeah, exactly. And Panama is just like a lot of other countries are. If you don't have income that you earn directly there in that country through a restaurant or a job or something like that, you don't pay any taxes. The US is unique, and it just causes a lot of problems. I mean, the US tax laws are so complicated to begin with. Well, we don't need to make them any more difficult. So as I was saying, good point, Mary. The foreign tax credit is one way to help reduce your US taxes. Whatever you have to pay to one country, you use to reduce your US taxes. Okay? The other way is specifically for wages or salary, or if you own a business that's not incorporated, a self-employment income. All of that is considered earned income. If you have that type of income, then you're allowed a deduction every year, or an exclusion every year on your US tax return. And this works out great.
It's my favorite thing.
Yeah, I think it works out really good for you, Mary. So
it works out so good for me.
You get a big tax exclusion in the US, and you don't have any Panamanian clients, so you're not paying any Panamanian taxes. So it really helps to save quite a bit. So for 2022, the amount is $112,000, and it goes up a little bit every year for inflation, right?
Yeah, I think it's going to be 120 for 2023.
I think so. I don't think they've actually finalized it, but they floated the numbers. But it's going to be quite a bit more.
It's substantial. So I'm telling you, look, guys, this is why I have Allen here and why I tell you he's my hero and has changed my perspective. From living in Los Angeles, California, one of the tax heaviest states in the union and the US government, my move to Panama has saved me from having to write a 5-figure check every year. You can live a lot in Panama on 5 figures. Yeah. So I'm telling you, last year when Allen did my taxes, for the first time in well over 20 years, I had zero. I think I actually had a little bit of a refund. So from taxes that Brian paid in on his work in California. So
he got a bit of a
guys, this is serious stuff. Yeah.
Yeah, you can really save quite a bit of money. I mean, you can easily save about $18,000 a year if you just, if you're just working outside of the United States.
Mm-hmm.
And there's other things you can do as well too. Like if you own your own corporation, you can easily set up your own retirement account, like your own 401k account, really fund that, and you're going to pay little or no US tax.
Amazing.
Yeah.
Yeah.
So the foreign earned income exclusion, basically the way it works is, you add your salary and then you subtract it up to whatever the maximum is. So if you earn 112,000 in 2022, you can subtract 112,000, means you have zero amount of your salary that's being taxed. Which is simply amazing. And then if you're in Panama and none of your clients are in Panama, you're not paying any Panamanian taxes either. You're not paying California taxes, which top out at 13.3%.
On top of the federal
on top of
tax.
everything else. Yeah,
Exactly.
on top of everything else. So
exactly.
The savings quickly add up.
Massive.
Yeah, they are massive. All right, so that's one of the key benefits. And there's a few other benefits too. Specifically, if you rent, you can typically exclude a little bit more. But one question I get is, okay, say, Allen, I earn $132,000 or earn $132,000 in 2022, right? And I exclude $112,000 of it. That leaves $20,000. Well, what about that? Well, that 20,000 you can't exclude, but you can still apply a foreign tax credit to it if you're paying foreign taxes.
Okay.
So a lot of people who live in the UK and London, 120,000, 130,000 is an average salary because of the really high cost of living there. So they normally wind up paying zero tax, even though they have this quite a bit higher salary. So you can use both the foreign tax credit and the foreign earned income exclusion together.
Oh, interesting.
To really knock out any tax bills. So a lot of people who live in higher tax countries like the UK or Australia, Germany, etc., because of this, they wind up paying nothing to the United States.
Amazing. Now I have one quick question. So you have that 20,000 left over that isn't excluded. Are you in a tax bracket for the 132,000 for that, or are you in a tax bracket for 20,000 for that?
Oh, you're in the higher tax bracket.
You're in the higher tax
bracket.
To
a little law they snuck in 2011, using the foreign earned income exclusion bumps you out of those lower tax brackets, puts you into the higher ones. But again, with some planning, there's still ways to get around that.
Okay, perfect.
Legally, of course. All right, so I think we should maybe move on a little bit.
Yeah,
talk about
absolutely.
FBARs.
Okay.
How familiar are you with FBARs to talk?
Okay, I know there's two things. There's the FBAR, and then there's like another one called the FACTA or something, right?
Yeah.
And is the FBAR the bank one?
Well, they're both pretty much the same. So
okay.
They're basically what we're talking about is if you have foreign financial accounts, accounts outside. So we're talking about bank accounts. We're talking about investment accounts. We're talking about retirement and pension accounts, cryptocurrency, and any life insurance that has a cash surrender value. But we are not talking about anything that's like a Social Security type of account, like a U.S. Social Security account. So if you have these, you have to report them if they're over a certain threshold. Okay, so the most common one is called the FBAR, or the Foreign Bank Account Report. So this says if it's kind of funny how they define it, so it's easier to give an example. But the way they define it is they say if you have over if you look at each and every one of your foreign accounts, and you look at the highest balance during the year, and if the aggregate of all those accounts are 10,000 or more, you have to file an FBAR. And if you don't, when you're required, you could easily get a $12,500 penalty. So it's a little bit funny. You can actually be penalized for more than you have in the account.
Unbelievable.
So it is. Again, it's meant to catch money launderers and hardcore criminals, but it's fishing with dynamite, right? It just kind of devastational to everybody out there. So
Right.
let me just give 3 quick examples of how these work to really help clarify it. So if you have to, first of all, if you have to file an FBAR, you have to report all of your accounts, even those that have less than $10,000. And it's unclear as to whether you have to report an account that has a 0 balance or not. It's just unclear. So I just say report everything. Okay. So let me give you an example. You have, excuse me, 2 bank accounts. The first bank account, the highest balance is on June 30th, and that's $4,000. The second account, the highest balance is July 4th, and that's also $4,000. And you don't have any other accounts. Okay, so 4,000 plus 4,000 is less than 10,000. You don't have to file. Okay, now let's say the same facts. But except you have 5,000 in the first account, June 30th, and 5,000 in the second account on July 4th. Well, 5 and 5 together is 10. Now you have to file. Okay, so you have to add up the highest balance during the year of each account. And another example I'd like to throw in just to really bring home how convoluted this rule is. Say that you have 2 accounts, right? And on June 30th, you have 4,000 in each account. So altogether you have $8,000, right? 4 and 4. That morning, you get $1,000 deposited into your first account for whatever reason. Maybe it's even a mistake by the bank. So now you have 5,000 and 4,000, or 9,000 together. You don't have to report. But say that afternoon, you transfer $1,000 from the first account over to the second account, right? Now, altogether, you only have $9,000 in total, right? But the highest balance in the first account was 5,000 in the morning. The highest in the second account, 5,000 in the afternoon. Now you meet that $10,000 threshold.
Wow.
Now you have to report, or there's these ridiculous penalties.
Right. And guys, I want to interrupt just one more time. Do not think, well, my bank accounts are in Panama, so how's the United States going to know what I have in Panama? They know. If you've opened a bank account here, guys, you know all of the paperwork and the insanity and everything we have to go through to open bank accounts here. It's primarily because they have to report to the United States government. So don't think you're going to get by with it.
Yeah, in fact, the U.S. has agreements with almost every country. Basically, every year, information goes directly from either the government, like the IRS equivalent, or from each financial institution. Name, social security number, address, account number, highest balance. If you own a company that's not in your name and they know you're a U.S. citizen, they report that. Eventually, they're going to be able to use that information efficiently. Right now, they have it all. I don't think they do much with it because they don't know what to do or how to do it, or they don't have the people to do it or whatever. But it's definitely coming.
Yep. And better safe than sorry. File, people.
Yeah, file.
Yeah.
Okay. There is also a FATCA report, and that's very similar to an FBAR. It's just the thresholds are much higher. You generally don't have to worry about those until you have about $200,000 or more overseas. FATCA reports exclude real estate.
Oh, good to know. So if you have wired money into your account to, like say you have an account in the United States, you have an account in Panama, you're buying property in Panama, you wire funds from your US account to your Panama account of $300,000 to pay for a property, that's excluded?
Well, you would have to include that on your FBAR for that first year.
Okay.
And then the money goes out of the account to buy the house. So the next year you don't have that much in your bank account. And when you're looking at all the highest balances and these higher thresholds for FATCA, that case you exclude the property from the calculation.
Okay.
Yeah. So, and the penalties for not filing one of these, again, is really high. It's 10,000 for not filing a FATCA. It's virtually the same thing. There are very nuanced, small differences. You have to include a little bit more in FATCA, but otherwise, it's, you know, unless you really look at the regulations like I do, you can't really tell the difference. But
okay,
just a higher threshold.
Okay.
All right. So hopefully that provides a lot of good information there. And moving on to topic number 4, probably near and dear to a lot of people's hearts in Panama, buying property through a Panamanian corporation. Okay, so I understand there's a lot of reasons people do that, right? It gives a lot of different protections locally, which is good. You want to, you know, follow all the local laws. Who knows what they are? They can change. It's a lot of money. So you take your lawyer's advice. You set up a Panamanian corporation. You put your property into the corporation. Now the corporation owns it. A lot of great benefits. Unfortunately, IRS views it a little bit differently. So to be clear, you don't have to pay any additional taxes or fees to the government for doing this. It's perfectly fine. But now that you have a foreign corporation that you basically own 100% of, or that you can control, the CFC, or controlled foreign corporation rules in technical jargon. I should probably stop using all the jargon, shouldn't I? That means you have to file an informational return pretty much every year. So informational return is kind of like when we were talking about the FBAR. It's just providing information, right? You don't have any extra taxes or penalty, you know, or fees to pay to the government unless you don't file these when required. So owning a corporation, setting it up, even if there's no activity in the corporation, be it for running a business or for just simply owning your property in Panama, requires you to fill out this form called the 5471, which is by far the absolute hardest return to prepare. I've heard a lot of people say that a university level master's course could be offered on this, and it still wouldn't quite cover everything. So for very large corporations, it gets very complex, right? And there are people who do it just for one corporation, and that's all they do all year. Whereas someone in Panama who owns their home through one of these is still complex, but not nearly as complex. So why do you need to file this? Well, the government thinks if you have a corporation overseas that you own and you can control, you could be hiding money and not paying the taxes that you're supposed to. So therefore, they want to know a lot of information about the corporation on this form 5471. If you don't file it when required, there's really 2 penalties that come for this. One is a $10,000 penalty per year. The second one is basically if you don't file this form when required, then the statutes of limitations never start.
Whoa.
Yeah, that's a huge one. So you bought a property 10 years ago.
Oh my
you
God.
know about this. You think you're out of the US tax system. Technically, if you haven't filed, they could go back all the way 10 years, audit your entire tax return for each and every one of these years. They can assess you a $10,000 penalty or $100,000 altogether. And then how are you going to come up with that money? You're going to have to sell your property and.
Oh my God, that's crazy. Okay, so now here's another one of my interruptions. Okay, there are a lot of expats here from the United States under what was previously Panama's friendly nations visa. And it was one of the easiest residency visas to get in the entire world. You literally just had to open a corporation and put $5,000 into a bank account, and cha-ching, you had residency. That's how we came in. Now, those rules changed about a year and a half ago or so. But there are a lot of US citizens in Panama right now, I guarantee you, that have corporations that they have not even thought about since they opened them to get their residency, which could have been, I don't know when that particular visa came into play, but I mean, it could be 5, 6, 7, 8 years ago. So you don't have to just have property under a corporation. If you have a corporation, if you just opened a corporation for your residency purposes, and that's it, you're still going to fall under this umbrella, and you could be in kind of a mess if you haven't been filing. So if someone is in that situation, Alan, let's say they came in under friendly nations 4 years ago, opened a corporation, their attorney has been handling the registered agent stuff for them and paying the annual taxes for the corporation here in Panama. Hey, told you dogs would be barking at some point. I warned him. Guys, stop it. So it's been 4 years. They've been paying their Panamanian annual fees for that corporation, but they have not filed with the IRS. Is there some pathway out of this without owing $40,000 in penalties?
Yeah, there is. There's actually two pathways, thankfully, because believe it or not, there are some very competent people in the IRS, and they actually do take the time to understand situations and, act reasonably. So the first is what's called a streamlined filing. Okay, so this is if you're living overseas, for example, maybe you've been filing your tax returns, or maybe you haven't because you didn't know, but for whatever reason you want to get right with the IRS. Okay, so what you do is you fill out one of these. First, you have to go through and provide a detailed explanation as to your situation and how you got into it. And there's some specific things that the IRS lists that they want to hear about. And then you have to file the past 3 years tax returns. Or if you did and you need to add something like because you have a corporation, you need this extra form 5471, you amend your returns for the past 3 years. Also, you have to make sure for the past 6 years, all of your FBARs, or foreign bank account reports, are filed if they're required to be filed. So you put this package together and you mail it. You have to print it out and mail it, send it to the IRS. And if they approve it, and I've never seen one rejected that was put together well. If they approve it, then they generally waive all penalties. And then they say, okay, you filed for the last 3 years, all of those years before that, forget about it. Don't worry about it. You don't have to file. You don't have to pay. Just from this point on, make sure you file correctly. So that's a fantastic program. It's been in place for years. I've done a lot of these filings myself. It's given a lot of people peace of mind. However, the IRS has said that they could end this program at any time. They haven't given any clear indications as to that they're going to do this, but they've had they call this an amnesty program. They've had various other amnesty programs that they have shut down after a few years. So I'm not sure, if they're going to close this down anytime soon. I don't think so. I hope not, but there is that possibility out there. So that's the first thing to do. And that's the best route to go. A streamlined filing, explanation, past 3 years of returns, past 6 years of FBARs, send it in, and then hopefully done. So
bottom line, get to them before they get to you.
Yeah, so absolutely.
Don't look. I'm telling you guys, ask Alan, I am the biggest procrastinator when it comes to taxes. I literally did not even I was like the end of September. Okay, Alan. But I mean, I didn't when I was in the States, I didn't file for almost 5 years. That was before Allen knew me, because I just got so overwhelmed with it. But guys, seriously, if you're in the situation that I just said, you've opened up a corporation either for your property or for a residency visa, don't hide. Don't think they're not going to find you. Be proactive. Get with Allen. He'll get it taken care of for you. And then you don't ever have to worry about that letter coming in the mail. Seriously.
Yeah, the penalties are ridiculous.
Yeah.
And if you come forward, they're very lenient. Streamlined filing, they just say, okay, just going forward.
Right.
You don't want to be on their bad side. You really
No.
Yeah. Okay, so there's a second method. If you're in a situation where you need to fix a past problem, a lot of times you can file an amended return to fix the problem, and then you attach what's called a reasonable cause letter, and you hope that they accept that. So it's just exactly what it sounds like. It's you have a reasonable cause for not doing whatever it was you were supposed to do. Okay. So it's not as easy as it sounds. You kind of write a letter and you kind of explain and you think about it and you come back the next day and you add some more. No, it's if it's a bit of a complex situation, or if you're talking about a good bit of money, you're going to want an attorney involved. I refer some of these more complicated ones to attorneys, because you're going to want to cite IRS sections and regulations and maybe even case law and all the really legal sounding stuff. So that's
streamlined filing sounds like maybe the better way to go.
Absolutely. If you qualify for that, absolutely. Okay. The reasonable cause is a little bit of a long shot, and it only works if you're talking about a bigger issue. If it's a smaller issue, you might just have to give in and pay. Even if you don't think you should, because a lot of times your only other recourse is to go to court, and that's super expensive. Yeah, that's long and dreary. So do the streamline. If it's a big case, a big penalty, maybe work with a lawyer and a CPA and do a reasonable cause, but that's not a good situation to be in. A good venue to pursue if you have to. All right, so maybe we should touch on state residency a little bit, our last topic, and then go to the Q&A subject. So I see we've gone way over time here. Sorry. I tend to be a little bit passionate.
No, it's good because it's great information. And I'm telling you, people need to hear this stuff. And so if they don't have an attention span of 45 minutes, then tough on them. Okay.
Yeah. I know a lot of this, people just don't know. And then they talk to other people, other Americans or people from other countries, and they're, no, I didn't, I don't. It could be I think you either got to take one or two approaches: either continue to ignore it all and hope nothing ever happens, or just get straight and keep filing. Like there's no middle ground. It's kind of all or nothing.
And they'll catch up with you eventually. That's the thing. Eventually they will catch up with you. Chances are.
Yes, sadly. Okay. Well, state income tax returns, right? What if you're from one of the 43 states that require income tax returns, and you move to Panama or anywhere else? Basically, once you move out of the state and you move somewhere else, you're cutting residency to that state. Okay, and then once you cut residency to that state, most people don't have to file state income taxes anymore. Okay, only if they have income directly from that state do they have to continue. So if they own rental property in California, right, and they leave California, they still have that rental property. Well, yes, now they have to just file for that rental property only, not for everything else. Or if they have a business that operates there, for example. Those are the most two common cases. But otherwise, once you pack up and leave, if you pack up mid-year, you file a part-year resident return, and that's it, unless you move back. You're pretty much done. California and New York are a little bit tricky. They don't want to let anybody go.
Right.
But that's
I'm glad you mentioned that, because I was going to touch on that. I know that for California, they will come after you. They are not letting you get away with your money. So you really need to, if you're in California, you need to get rid of your driver's license, get rid of your bank accounts, get rid of your attorney, get rid of your doctor, get rid of any ties like that that you have to California. So if they ever do come at you, you can say, I don't even have any ties to here. I don't have a driver's license, a bank account, a doctor, a job, and anything. That's going to be much more in your favor. So, and that's what Brian and I did. We just cut ties completely. We moved everything to Florida, which is a no state income tax state, and then just started fresh from there.
Yeah, with California, you really got to be careful. I mean, I tell people even, cancel your library card.
Everything.
Things to do. Yeah, everything. Like you can like maybe, if you have a parent or a friend, you can leave some clothes or a few personal belongings, but you don't want to have a car there. You don't want to have a property there, even if it's a vacation home. That's probably not a good idea. Like you just want to get rid of everything.
Yeah.
And when it comes to New York, which is another aggressive, not as aggressive as California, when it comes to New York, you got to be really careful if you still own property there, whether you own it or rent it or lease it, that could pull you in. So there's, and also if you spend a good bit of time in any state, generally 6 months or more, then can you really say I live in Panama? If you're in California for 9 months of the year, that's not the argument I would want to make.
Right.
So basically, once you leave and move out, and some states like California, you got to be really diligent and really aggressive about making sure it looks like you moved. Then you're out. And another common question I get is, well, okay, well then, do I need to go to Nevada or Wyoming or Texas or have a residency in another state, any other state? No, you don't. You do not need. A lot of people think that they need to move from California to Texas briefly before moving to Portugal or Panama to have a state residency, specifically in a state that has no income tax. That's not the case. I'm not sure how that is getting out there, that idea, but you don't need to have a resident in any particular state at all.
Okay, perfect.
All right. So do you want to go ahead and move into some of the questions that your viewers?
Yeah, let me pull up on my handy dandy phone. So guys, I'll do my housekeeping real quick. Look, bringing you content that is informative and educational is my goal here at iGo Panama all of the time. So if this is the sort of content that you need in your life, make sure you subscribe, make sure you click notify, because we do post videos every Friday, but I posted this do you want to ask questions video on a Tuesday a while back. So click notify so you know every time we post a video. And then make sure you join the iGo Panama Facebook group. As of the time of this video, we are almost to 17,000 people in there. Wow. So we can answer any question you might have about Panama. Now, if you got tax questions, go to Allen. We're not going to help you with that. But if you have anything else about Panama, come over there. And in fact, when we're finished here, if you do have questions about anything Allen has talked about, you'll be able to ask questions over at iGo Panama Facebook group, and that'll be linked below. Okay, so let me go through these questions that some people asked. The first one is, and I'm just going to read them as written. So if they don't kind of make sense, we'll sort them out. Are the requirements for U.S. citizens and let's say a European national vastly different? I mean, I'm not a tax expert, and I would say yes, because it depends upon what country you're coming from as to what your filing requirements are, correct?
Yeah, absolutely. So with the vast majority of the countries, if you're from that country, but you're not living there, you don't have to file any tax returns. You don't have to pay any taxes. It's just where you live, that country that you live, that's where you file, that's where you pay, nowhere else, except the United States. Okay. So with the United States, doesn't matter where the income comes from, anywhere in the world, you have to report it as long as you earn enough, depending mostly on your filing status or married filing.
Right. And we talked about that earlier. Right.
Yeah.
Exactly.
That's the key difference. So you still might have to pay taxes to the US, but hopefully you can take advantage of some of the tax benefits.
Okay, perfect. All right. This next question says, my question is how to address establishing the correct residency status if I'm retiring and intending to be part-time resident in the United States, less than 6 months in the US a year, and become a full-time expat in Panama. What steps do I need to take with regards to the IRS and filing?
Well, it doesn't really change your situation too much for federal tax purposes. If you earn more than whatever your applicable threshold is, you have to file. Now, the question is, do you get the tax benefits of mostly living overseas? And you probably should. It depends a little bit on how you file and when you file, and there's a couple of technical nuances. But if you're basically living in Panama or outside of the United States, 50% of the time, you're going to get at least 50% of the benefits.
Okay.
You don't quite get them all for the whole year.
That makes
Pensions
sense.
are a little bit different. Unfortunately, those don't qualify for the foreign earned income exclusion, but you can use the foreign tax credit, meaning whatever tax you pay on that to another country, you can use it to reduce your US taxes.
Oh, that's an important note because we do have a lot of people in Panama that are here on the pensioners visa. So they have a pension coming in from the United States. So they do still, so they don't get to exclude that income on their taxes.
Unfortunately, they do not. That's correct.
Oh,
The IRS is
guys,
actually
see, that's
very
why you watch the whole video. This is important information. Yeah.
Yeah, unfortunately,
wow.
no, that, and the IRS is very specific, made a specific revenue ruling regarding pension income. You don't get the foreign earned income exclusion on that, which I think you should, because that money comes from work you did over the years. But if you do have to pay tax in Panama or whatever country, then you can use that tax to reduce your US tax.
Okay, perfect. That sounds good.
Right.
Okay, next question. I would like a clearer explanation of any tax breaks, deductions, or exemptions available to American expats who are Panama residents and operate a U.S. business while living in Panama. I mean, I guess that just goes back to the foreign earned income exclusion or the foreign tax credit, right?
Yeah. So if it's an unincorporated business, which most businesses are, then you can use the foreign earned income exclusion for a reasonable salary paid to yourself, a reasonable compensation, whatever is deemed that. You don't necessarily have to pay yourself a formal salary on a formal payroll. There are situations in which you might want to do that.
Okay.
Now, a lot of people are surprised, especially digital nomads, that they still will owe tax, even though they get the foreign earned income exclusion, maybe the foreign tax credit. They're really surprised because on your tax return, you don't just pay income tax. There's other taxes that go on there also, specifically the self-employment tax. And that is a huge shock to a lot of people. And that tends to be about 15.3% of your profit that you earn from your business. So a lot of people think, okay, I'm not going to pay any tax. Well, surprise, sorry, you do.
Yeah.
So
Okay.
this is for basically business owners. And if you're a freelancer or a digital nomad, you're considered a business owner. So a lot of people are a little bit confused about this. So just kind of think back, like maybe when you worked in the US and you'd have Medicare and Social Security taken out of your paycheck, right? That was 7.65%. A lot of people don't realize that the company that you work for, they also have to match that amount, that 7.65%. So together, that's where the 15.3% comes from. And for self-employed, it's 15.3% because you're considered both the employee and the employer. Okay, so at least one benefit of that is that you do get Social Security credit for that money. And that does go towards your Social Security benefits.
Okay.
But if you get in the situation where you're earning quite a bit of money and you're paying a lot of self-employment tax, the best strategy to consider is to make an election to be considered an S Corp. S means small, so small corporation. It's an election that you can make with the IRS. If you look at internet videos, you know, you'll see all these people say, oh yeah, to S Corp, do it right away, sign up, you know, just, you know, why are you waiting? Do it right away. Well, you can, but it's not going to be worthwhile unless, number one, you're making a lot of money, and number two, you're making enough to where it's worthwhile to file all this additional tax reporting. You have to do a corporate tax return form 1120S, and you have to do a quarterly payroll form 941 for 4 quarters every year, and then you have to do the 944 annual payroll. So there's more paperwork involved. There's more effort. So you have to kind of consider that as well before you just jump right in.
Just
And
jump
if
in.
anybody wants to discuss that, I'm glad to have a consultation with you to go through all those.
Okay.
When it
Perfect.
makes sense and when it doesn't.
Okay. Next question. Let's see. My husband and I, both U.S. citizens, spent about 6 months in Panama. Our job situation didn't work out, so we aren't full-timers. We bought a house there that we are keeping for vacation and future use. We kept our home in Oklahoma as well. We have a Panama bank account and are moving forward with residency in Panama, currently in the temporary stage. We did not earn additional income while we were there. All our income will be U.S. W-2 based. Since we have no income from our time in Panama, is there anything different we need to do with our tax filings?
Well, there are a lot of issues to consider there, but the short answer to that is no. You don't have to do anything different unless you purchased your home in Panama through a company.
Okay.
So, through a corporation, or
right.
another business like that.
So they continue. Are there any deductions or anything we can file based on buying a house here in Panama?
Yeah. If you have any mortgage interest, you can deduct mortgage interest on a second home. But I think most properties you have to pay for in cash, right? Foreigners can't really get mortgages.
Most are cash. It's really hard to get a mortgage here, and they want 30% down, and the rates are exorbitant. So, I mean, if you do have a Panamanian mortgage and you're a U.S. citizen, I mean, you're going to, I guess, be able to deduct some of that mortgage interest off that's so exorbitant. So maybe then that can kind of balance out.
Yeah, that could maybe balance out.
Yeah. Okay.
But I would say the big benefit, though, of owning a property anywhere in the world, even in Panama or outside the U.S., is if you own the property long enough, you can exclude up to $250,000 in gains if you're single, double that if you're married, filing jointly. So
those same capital gains rules that for property that you own in the U.S. transfer down here to Panama as well.
Yeah, it doesn't matter where you own your primary residence. Anywhere in the world, as long as you meet those requirements, and they're basically 2 requirements. So when you sell a house, you look back for 5 years, right? Number 1, did you own that property for at least 2 years out of the 5? And it doesn't have to be consecutive years. The answer is yes. Then you go to the next question. And the next question is, you look at 5 years back from when you sold the house. Did you live in that property for at least 2 years during that 5 period? Again, it doesn't have to be consecutive months. And so you can rent and buy and live there and move back. If you meet those 2 requirements, then you get to exclude $250,000 of gains, double that if you're married, filing jointly, and you can do that every 2 years, basically. And
if you have sold property in Panama and made over $250,000 in gains, call me. I really want to know your strategy. Okay. So, all right. Let's see. Do you have to report interest from a Panamanian bank account?
Absolutely. Any income worldwide, no matter what the source, you have to report it. Bank interest, dividends, investments, rental income, worldwide income anywhere, it doesn't matter. Technically, if you work on a cruise ship, you have to report that income. And if you work in the International Space Station, this is a real thing. I'm not making this up. International
the long
Space
arm
Station,
of the IRS will get you even in space.
Even in space, yes, even in space.
Awesome. Okay, well, that's it for questions. Do you have anything else to add, Alan?
Yeah. I just want to say, don't don't be scared of the tax law. You know, if you need some help, don't be afraid to reach out and get some help. It's best just to stay compliant, file when you need to. A lot of people, a lot of expats pay little or no tax. Some people consider expatriating. I can do some consultations on that. You'll see a lot of videos on that, you know, get out of the US tax system. It's, you know, on YouTube, it's really not that easy. And for the majority of people, it doesn't make financial sense. You know, it's just the nature of the internet out there. There's a lot of information out there, but it's hard to determine what's credible and what's not. So
absolutely,
join webinars like this, do some of your own research, you know, hire a professional for a consultation if need be. Just, you know, as long as you're proactive and you can always show that you're trying to do what you think you're supposed to do, you know, worst case scenario is not going to be that bad. You're going to be way better off.
Absolutely.
You know, personally, I like to sleep at night, so that's why I like to make sure
exactly
everything is done right.
Exactly. So if our members want to contact you for a consultation, how does that usually work?
Oh, well, I'm glad to do that. Normally, well, my rates are just $300 an hour, which is actually very reasonable because it's
very reasonable. I actually consulted with 2 other people before I found you, and that's what I was paying, and didn't get anywhere near the information that I've gotten from you.
Oh, well, thank you.
You're welcome.
Try. So $300 an hour, and it's 30 minutes minimum. And honestly, 30 minutes tends to be ample time for most people. If you have a particularly long and complex series of issues, then maybe a little bit longer. But you can reach out. My email address is allen@allenp.cpa.
And I'll link that below.
Yeah. ALLEN@ALLENP.cpa. That CPA domain is only for licensed CPAs. Glad to help you out.
Awesome.
And if you just have a quick question or two, you don't necessarily need to set up a consultation. You can email me. I'll gladly help you. Consultations are for when you really want to take an in-depth dive into your situation and get some really custom tailored advice to help you out.
Absolutely. And guys, look, I'm going to stop right here and say this because I know some of you do not take advantage of Allen's time. Okay. Do not send him 50 emails and expect 50 free answers. Okay. I know how some of you guys treat Kramer Law, and then you complain that they're not answering your emails. Come on, you got to be reasonable. Okay. This is serious stuff. Yes. And you really do. Believe me, the $300 or the $150 if you only need half an hour is so worth it. I cannot tell you, it's the best bargain in Panama. Okay, by far. We all know it's a little expensive to live here, so it's a really good bargain. I promise you. Yeah. All right.
The biggest thing I hear all the time from people who benefit is that they're just relieved that they know what the situation is and what their choices are and what their options are. I almost seem like I should be a therapist, but it's not my calling. I'm a tax guy.
You've changed, like I said, you changed my life. Like I have all of my tax information ready to go, Allen. I had it ready before Christmas, everything for my business. And then I'm just waiting on Brian's stuff from his job. And then boom, I'm ready to get it over to you because I'm not scared of it anymore. Like when you don't have to write some massive check that makes you want to throw up, you're not so scared. You just get it out of the way. It's done and you go on with your life.
Yeah. All that money can go to a property. It can go to your retirement.
Absolutely.
You know, it's not going to the government for them to do with whatever it is they do with our money.
Exactly. All right. Well, Allen, I really want to thank you so much for the time you've spent with us today and for your knowledge and just how you break information down into a simple way that everyone can understand. Because as a teacher, that's what I'm always trying to do with my students. And I try to do that with the I Go Panama channel. And you have fit right into that perfectly. I think everyone can understand everything you talked about, even that little bit of jargon that you gave us.
Sorry,
in the
I'll try to
middle.
avoid that in the future.
It's fine. It's really understandable. All right, guys. So again, I'm going to link below Allen's information, but instead of just emailing him immediately, I really would prefer that we put everything on the iGo Panama Facebook group. I'm going to link a post down there where everyone can come over and ask their questions. And then I'm going to bulk put those together and get those to Allen. And then we're going to come back and revisit all of this in 2 or 3 weeks, depending on schedules, and get all of your questions answered. So if you need to rewatch the video, you know, you have specific kind of questions, let us know on the iGo Panama Facebook group, and we will get those answers for you. And if you have kind of a complicated tax situation and you know you just need to immediately go into a consultation with Allen, feel free to go ahead and just email him now so he can start sifting through your stuff. Don't wait until April 14th. He's very busy then. This is probably a really good time of year for people to reach out and kind of start getting things sorted out for the tax year.
Okay, great. Thanks everybody for listening. And a lot of people tend to have similar questions, or people come up with questions you may not think of. So please join us again in the next few weeks, and in the next week when we go through some questions.
Sounds great. All right. Thanks again, Allen, and I will talk to you soon.
Okay, goodbye.
All right. Bye.